for joining into the webinar. We're looking at our financial reporting webinar session today. So as per usual, just before we jump into the content, at any time, do feel free to hover your cursor over the information icon at the top right of your system, where you can find access to the training materials, webinars, both historical and ones that are coming up. There's access to the What's New section that talks about things that have been recently released in the system. You can contact support, submit an idea. There's lots of resources there. And then also, and I'm surprised that not many people notice this, although we try to not to have it get in your way, but there's a little question mark down at the very bottom right corner. And if you select that, it'll give you a bunch of contextually relevant information that can help you out with the page that you're on. So the information that you see here is specific to the page that you're looking at and the area of the system that you're looking at. So check that out if you're having a question about it. If you come up with a question in your mind about a page, you might find the answer really quickly just using that little question mark down at the bottom there. So I do recommend checking that out. Okay, so with regards to reporting in the system, one of the, oftentimes one of the best methods is to kind of look at building the report yourself and pulling up information that's appropriate, that's relevant to what you're looking for, and then generating a report for it. And we're going to be taking a look at how to manage fines in order to do everything from just generate a really, really simple report to something that could be quite a bit more advanced, much more custom, and can be used over and over again in the future. We're going to look at some specific examples. But the first thing that I'm going to touch on is just the concept of the fine. Most people are probably aware of this. We won't spend too much time on it. But this is really just pulling up information based on filters that are important to you. So for example, I might say, well, okay, I want to look at all the jobs that are, I want to look at a financial perspective, high level, of all the jobs that are currently active, that are that have been opened, or perhaps that are due in the next 6 weeks. So I'm going to do a job find, and I'm going to narrow this down by delivery date. I'm going to say, show me everything due between today and the next 6 weeks. By putting in 3 dots, it will create a range. You can use any kind of date information you should choose to use. So I could say, well, I'm going to put this from May 1 until, let's say September 1, and it'll pick up those dates. It's always going to default to the current year. So if I want everything from last December until next December, I would put in December 1, 2016, ... to December 1. 2017 is not necessary because it already knows that, and it pulls up that appropriate date range. So let's just say everything due between today and the next couple of weeks here, so we can get up that list. Say 6 weeks. And I'm just going to select Find Active. Selecting Find Active will only show us jobs that have a status of open or an alias of open if you've customized your statuses. And that produces the results of our search. This is very similar to the default look that you're going to find in your job list view. And there are some financial values that we can see here. So right away, we can see the estimated dollar value associated with the job, the actual dollar value, so the value of your time and expenses entered so far, the variance between those two, and how much we've invoiced on the job so far. Let's sort this so we have an invoice value. And then finally, a comparison here between the value of what we've invoiced and the value of our actual work. So in this case, we've actually gone over by $577, and there's $577 that we haven't billed yet. Actually, we were over by $185. So this is a very, very default, standardized financial view of the information that we're seeing. And you could do a lot of different things with this. For example, if you just want some totals, we can produce a PDF, and we'll have totals for that PDF. We can also export the data, and we can export all of the data in the system, which you typically don't want to do, or the current view, which is just what you're looking at. And that's some of the basics, but you can get pretty clever with this information. And the realm of possibility of what you do with it is quite extensive. So let me give you an example, and there's an infinite number of examples. So I'm going to pull one up. I'm going to produce an example that is that's really common and something I get asked a lot, and that is I want to see an expense report. So oftentimes when people are thinking expense reports, they're wanting to look at the expense section. But let's say in this situation, I don't just want the expenses. I want to know for all these jobs, how much did we estimate we would spend on expenses? How much have we spent so far? How much have we invoiced? What's the billable value of those expenses? And then what's the profitability of those expenses as well? Now, profitability of expenses is not something you're going to find in any standardized report anywhere in the system. It doesn't exist. But you can easily create it yourself. Very simple. So what I'm going to do for this expense report is up at the top, I'm going to select the manage columns. Actually, before I do that, I'm going to narrow this list down a little bit. I'm going to narrow this down by, use work type. I'm going to say, show me all of my print jobs, just as an example, just to narrow down the list a little bit. Show me all of my print jobs that are active. So just a shorter list, a bit easier to work with. So from here, I'm going to choose to manage columns up at the top right. And I'm going to deselect all of my financial values that I have here, all the standard financials. And up at the top left, there's a button that says Advanced. A lot of people don't know this is here, but if I select it, I have access to a variety of different advanced financials. So I'm going to choose Estimated External Expense, because I want the estimated value of my external expense. I want actual EE cost, EE being external expense, so actual EE cost and actual EE dollars, that being the billable value. I also want invoiced external expenses. And then perhaps maybe I want an invoice total. I don't want the subtotal there. I just want my total invoice amount, so I'm going to include that too. Once I've selected the values that I want, I'm going to order them as I see fit. So I'm going to put estimated external expense to the left, actual external expense cost, then billable, then invoiced, then total invoiced. What this then allows me to see is information that there is no report in the system that's standardized is going to give this to you. And again, I'm just pulling up one example. There's an infinite amount of examples that you could think of. This is just a common one. But in this case, it's showing me, all of these jobs, and well, I guess it makes sense because they're print jobs, but all these jobs have an estimated external expense value. So we've estimated external expenses for all of these. We've purchased external expenses for the following. So anyone where it's a blank, we haven't purchased anything yet. I'm going to sort this by that value actually. So here we are there. We can then see the actual external expense dollars. So this is the post markup value. We can then see the invoiced external expense value and the total invoiced amount. So I can look at this and see that of these expenses, a bunch of them are not billed. That's an important aspect of my expense report, the fact that we haven't invoiced for 4 of these. I can also see that in one case, we actually went over. So, we estimated 4,800, we went over that, and we only invoiced 4,800. So when I'm wanting to see, what is the profit loss on these expenses, then what I can do is choose to export the current view. And I know that the profitability of these expenses is going to be based on the difference between how much we invoiced for the external expense and what the cost was. So I'm going to put in a new column here. I'm going to call it P&L. And I'm going to make that compare my invoice value negative my cost value. And it's telling me that I lost $200 on this expense. Now, in this case, there's only a couple examples, so the math would have been really simple for me to do in my own head. But if you have, potentially hundreds, then of course you can expand that value and then look at a total for that column. And at this point, until we run our next invoicing session, we're currently sitting out $5,400 on our external expenses. And this is a value you will not see anywhere else in the system if you're not exporting the data and then producing it yourself. So that's, one really simple example. Well, simple, I guess, is relative, but that's one example of how you might, think of a report. The system's not providing it to you in a standardized method, so we can pull up information, customize the value that we find, and then export the data to create our own report. When I said simple, what I meant was that all we're doing is just adding in an extra line onto the Excel export. But if you have a little bit of kind of baseline Excel skills and capabilities, you can get quite creative, and there's a lot of really neat things that you could do. So let's look at some other ways that you can do some customized reporting and then maybe standardize that for future use. So here's a really common example people ask for all the time. A lot of times people want to see values by service, and they want to see values by services that I've been tracked against. So I want to look at how many hours have I tracked to a service. Just really simple. Just give me the total hours by service that I've tracked against. I'll perhaps also want to see what's the cost value of that time, what's the billable value of that time, how much have we actually invoiced for it, what's the profit loss of that. And you're not really going to find a report that's going to show that to you in the system. So we're going to create our own. And in that case, what I'm going to do is I'm going to do a timesheet find. And I'm going to say, show me everything from, let's just say maybe April 15 to today. So everything from the 15th of April to today, select find, and that produces the results of my search. Now, what I've done on the side in the past is actually created a report that I can use over and over again. And this is it's a pretty simple example, but all I've done is I've saved an Excel workbook where I've put in some really basic, simple formulas where when I paste in my timesheet data on the left, it's going to give me totals on the right. Totals for hours, for cost, billable, invoice, and P&L. It's a really, really simple sum-if formula. Every time that the word research exists in this column, in this column, add up the value from these columns. Once I've created that, all I need to do at any time, it takes very, very minimal effort, is I just pull up a list of timesheets from any date range I wish, export that view, and I literally just select the whole thing. I probably have 500 entries for this last month or so. Yeah, it's almost exactly right. So select this view, copy that, and then simply paste it into my report. By doing so, I then have totals for all of the line items or all the values that I was looking for. I've spent 55 hours on research, 132 on design over this last month. I can see the billable value of that work. How much have we actually invoiced, and the profitability of those different services. And this is an example that's all coming from one find, the results of one search. Just doing a really simple, sum-if based on these terms. And this is really, really easy stuff. I mean, 5 minutes on Google, and you can figure out how to build these types of things. I know that's how I did it. But there's also other possibilities as well. And there's another really cool example that I want to show. That actually pulls data from a variety of different sources in the system, and then through some creative Excel work allows you to create a report that the system doesn't provide anything that resembles what we're creating, but because of our ingenuity, we can produce. Before I do that, Sophie, I don't think there's anything that I need to touch on screen, but I figured I should check in. Anything that you want me to mention, or anything I've missed, or should address at this time?
No. I think you definitely taught me something, and there are lots of clients that even have taught me different Excel formulas that they use to calculate some interesting numbers. So it definitely, Excel is a wonder when coming to just adding extra into the reporting.
For sure. Okay, so the next thing that I want to show is it actually comes from a request that we had recently, and And I'm gonna show a template that I made based off of that request. So the request was an agency wanted to look at all of the values that they've invoiced within a time range based on criteria of a company. In that case, it was location, but it could have been anything. So for example, when we look at a company find page, there's values that you'll see here that you'd expect for a company. Things like city or country, location information. There's other data as well. There's things, like IPO, show me all the companies that are public. Perhaps I want to look at a custom field. The point is that there's a lot of fields that are specific to a company find that you may not find in other places. If I do an invoice find, nowhere on this page am I going to find anything that is going to tell me where a company is located. So I can't do an invoice find based on state or city in order to look at values that we've invoiced based on geographic location, for example, or based on a custom field. So I might have custom fields that I've created that could be related to anything, anything that you feel is important to track. If I want to then compare those two values, I can build a report template that does so. So for example, I've put together a report here that allows me to see if I pull up a list of companies based on a certain value, and I pull up a list of invoices, I can then compare those bits of data. So let's say, for example, I want to know how much have we invoiced in this last year, just in this year so far, for all of the companies, all the clients that I work with in Canada. So we have clients in Canada and the US and a variety of other places in the world, but I want to see my invoice totals for all of my clients in Canada. So I'm going to just pull up a list of all of my clients in Canada. I then have the results of that search. So I have 29 clients in Canada in the system, and I'm going to choose to export that. So I then have that list available. I'm then going to pull up a list of all of the invoices from January 1 to today. And I'm going to export that. So now I have two lists. Every single company that exists in the system that is located geographically in Canada, and all the invoices for this year. What I'm then going to do is I'm just going to pull up all that list of all the companies and drop it in here. I'm then going to I'm going to look at that invoice list, get rid of some of the stuff I don't need here. So I'm going to get rid of some of these columns that are not relevant to me. And I'm then going to take all of these invoice amounts with the company name. And I'm going to drop it right here. Now, what this is then doing is giving me a total. So in total, I've invoiced $410,000 for all of my clients in Canada. And the way that it's doing that is this field here. So when we open it up, you'll notice it's highlighting the columns that it's referencing. It's looking at the value in this cell, looking to see, does that exist in my Canadian companies list? If it does, add up the invoice amount. It's very, very simple, very basic stuff, but it allows me to pull up and cross-reference data sources from a variety of different areas of the system and then compare them to build whatever I want to build. So again, it's just one example, but really there's no limit to what you can think of with a little bit of creativity. And because I then have this saved as a workbook, the process for producing this report, takes me 15 seconds, 20 seconds tops, and I have this well formatted, well thought out report that's giving me the values that I'm looking for. I can produce that to maybe cross-reference other data as well if I come up with something in the future that is not currently solving that I've come up with based on maybe a request from someone else in a different department. So the kind of the gist of that is that there really is no limit to what you can come up with. It's all just about, does the data exist in the system, and that of course is the key to all of this really is the data does need to exist in the system. Good data in equals good data out. So it's really important that you're tracking information accurately, you're tracking time, you're doing your billing, of course, if it's financial related reports that you're after, so that you can have that, so that the data exists in the system, so you could pull it out and then reshape it as you see fit. So the next thing that we're going to take a look at is going to be some of the standardized reports that I like to show off. So let's pull that up here. Okay. So the first thing that we're going to look at is the profit analysis report. So this is my favorite report in the system because I find it easy to read, easy to understand, and if there's a financial value that you're looking for that isn't down to the service level, like isn't drilling down into a high level of detail into the job, if it's just an overall financial value you're looking for, odds are you're going to find it in the profit analysis report. So where I'm going to find that is under reports, under analyze. There's two reports that say the word profit. One is gross profit, one is profit analysis. I highly advise using profit analysis. It gives you much more filters to work with. There's more flexibility, and it shoots it out in Excel as opposed to PDF. So I find that that's much easier to work with as well once you get it out. One of the key aspects of this report is the date range and limiting the date range to something reasonable. So, usually you're not going to look at, you could look at the entire system, of course, and just leave this blank. But if you've been using the system for a while, you're probably going to want to narrow this down. So I'm going to say from the 1st of January to today. I can then, of course, narrow this down by job status. So perhaps I only want to look at jobs that are closed or invoiced. I don't want to see anything that's currently open. And I only want to see jobs that are closed or invoiced with values within this date range. Narrow it down by anything else that I see that I should choose to do so. Click submit, and that will give us our report. So really what I want to do is just go over what these values are, because it's so kind of surprising. A lot of the time I speak with people and they say, this report intimidates me because I don't know what it is it's telling me. There's just so many numbers on the page. There's so many different column headers and terminologies being used here that, especially for new users, it can be a little bit difficult. So I'm just going to run through what these terms are referring to. So this is giving us a very, very detailed financial report at the company and the job level, referencing projects as well with totals by company. We can then see all of our different values. So what we have here is we have estimated internal cost. Anytime you see cost in this report, it's referring to the cost value to your company. What was the cost of your billable time? What's the cost of your non-billable time? How much did you pay for expenses? So not billable values here, but cost values. Actual cost to date is just, so the difference between, of course, estimated and actual being that this is the actual value of the time that's tracked in the expenses. Again, cost value. So that cost, when you see that word cost, it's the cost to your organization. We then have the estimated billable value of your time and expenses, the actual billable value of your time and expenses. So this is the your billing rates multiplied by your time and your expenses post markup. We then have your invoice to date for time and expenses, and then start our comparisons. So invoice versus estimated and invoice versus actual. These two, depending on your situation, are your work in progress. And you could almost do something like this. I'm going to merge these. I'm going to call this work. In fact, I'm just going to call it work in progress. And this is, my work in progress area. And the reason I'm saying it's both is because it just depends on how you bill. Work in progress traditionally is the difference between what you have invoiced and the value of your work. If I've invoiced $1,000 and I've put in $1,500 worth of work, my work in progress is $500. Nowadays, more agencies I speak with are fixed price agencies, or a lot of their work is built based on a fixed price. When your work is built based on a fixed price, then your work in progress is your invoice versus actuals until your actuals equal the value of your estimated amount. In other words, once you've gone over, it's irrelevant because you're never going to bill for your overages if we're talking about a fixed price job. So when you look at running this report, you might want to run some filters and look at it based on client or whatever it may be, and just know that where you see invoice versus estimated, that may be your work in progress if you never intend on billing when you go over. So it's just important to know how it is you're billing your jobs, and then you can decide upon which is a more important value to you. But this, for example, is showing us this website upgrade. Let's just use this as a perfect example. Our invoice versus actual is 0. So what that means is our invoice to date is $6,000, and our actual is $6,000. However, our estimated was $6,080. So those $80 that was left that we didn't bill for, if based on our estimate. So that's the difference between those two values, and they can be very important in like a financial status meeting. We then have 3 areas that are looking at profit, and I do find, even though it's traditionally a pretty this pretty common definition of what profit is, I do see different definitions thrown around from time to time. Estimated profit is basically saying this is what your estimate says you're going to make. It looks at the cost values of the estimate, the billable values of the estimate, and compares those values. So when you're looking at your estimated internal cost and your estimated billable value, compare those two amounts, and you have your estimated profit. The potential profit is the total billable value of all time and expenses on a job compared to the cost value of all time and expenses on a job. So it's basically saying if you billed for every timesheet and every expense at this moment, this would be your profitability. Profit loss is, of course, comparing your invoice value to your cost value. So these are a really nice way of looking at jobs, especially post-mortem, when they're closed, and just looking and say, okay, well, what did we expect to make? What would we have made if we billed for every timesheet we put in? And what did we actually make? And this is especially interesting for retainers and for fixed price jobs, for project-based billing, anything where you don't intend on billing the exact value of your time and expenses, because it really gives you it almost paints a story for you. What did we expect to make? What would we have made if we billed for everything? And what did we make? So again, this is, I don't see this looked at often enough. With so many agencies I'm speaking with these days, not billing time materials. Of course, billing with time materials is still a lot of value, still extremely valuable report. But when you're not billing time materials, it's very, very important to be looking at these numbers when you're done a job, so you can get an understanding, not just what did you make, but what did you think you would make, and that should be helping you to drive decision making in the future. Analyze it by client, analyze it by job type, determine where are we making more money. Maybe we should focus our efforts perhaps more on a specific type of service offering that we're just being more financially successful on. It's not always the total value of the invoice that's important, but what's the actual margin you're making on it, right? So that's those are 3 really important values that I recommend really diving into on any job that gets closed. So if I just want to check in here, I saw that you had a few questions that you were answering in the background. I think the last one just got put down and just got answered as well. But anything that you wanted me to touch on, or do you have a handle on that and think we're all good?
You know what? I'll be completely honest, Mark, that they all came in so fast that I haven't had a chance to read all of them yet. So I'm kind of just powering through. There is one item that might actually be cool just to quickly show if you're able. It's just the issue, the browser issue, where some of the Excel reports will try and pull in an XML format. In these cases, all you need to do is just open back up your downloads, right click, and then choose for it to open in Excel. It's just your browser trying to open it in a different format, unfortunately.
Yeah, so let's take a look at that. In fact, I'm gonna run through that, what you could do for a permanent fix as well. We'll show that. So let's say that I run this report. What it's probably going to look like, if your browser settings are trying to open this up in a browser, this is what's going to happen. And I know a lot of people get this, so I'm just going to go through it. This is what it's going to look like. Actually, it won't even open it for me. So a lot of times what happens is it tries to open the file in the browser, and it may open it up and just looks like gibberish. It's just a page of code, or you might get something like I just got, where it's saying, and I guess it just kind of fixed itself, but it might even just say, sorry, you can't open this. The permanent solution is, once you've downloaded the file, find the file in, on your desktop or in a Finder window. Right click on it and select Get Info. Once you've done that, you can then change the default program that it's opening with, because right clicking and opening it with that program, for some reason, it just seems like some people have it automatically default from that moving forward, and then other times it doesn't work. So this is how you make the default program Excel, so you don't have to deal with that problem again. So if anything else that you think we should touch on screen?
Yeah, maybe. We did have a good question from Erin. I think she would just love if you could show an example of where the last three columns on the profit analysis report are actually pulling from, like in the system. And Erin, you make a good point that some kind of tools tips would be really good for us to look into. We can definitely consider that for the future on some of these reports.
Yeah, for sure. Let's take a look at that. I'm going to pull up the one that I had earlier that was a little bit less extensive. There we go. I think I'm going to zoom this in a little bit. You'll notice I like to zoom it in quite a bit, so it's a bit easier to read here. Okay, so where we have these three very important values, so estimated profit, potential profit, and actual profit. You can find all of these values on this report, but let's look at the system and see where it's coming from. So let's look at this website upgrade job here that just happens to be at the top. So I'm going to do a job find. It was for a client called Blue Line Digital. So I'm going to pull that up. I think it's the only job we have for them. Here it is. Select that. I think that's, yep, okay. So when we look at the estimate for this job, what we have here is a cost value and a billable value. And it's a cost value and a billable value of that's on the estimate. So when you look at that report, so when we look at this report here, where we see estimated internal cost, we're seeing a total of 1530. And we can see that 1530 here. So that's the estimated cost value. That is coming from the hours that we've estimated multiplied by our cost rates, which actually could be coming from specific people or roles, and it's calculating a cost value for that work. We then have a total billable value, which is our hours multiplied by our billing rates. The potential profit the estimated profit is comparing this value to this value. And we can see that right here, actually. And we can see that, those values right here. But that's where that's comparing. So the estimated values, no timesheets or expenses or invoices or anything are taken into account. It's purely estimated values. When we then look at the next one, where we're looking at potential profit is the total billable value of our work subtracted by the compared to the total cost value of our work. So where we look at, in this case, I don't think there are any expenses on here, so it's all timesheets. So where we look at our timesheets, what is the difference between the cost value of our time and the billable value of our time? So it's looking at not estimated values, but actual values. So if we invoiced for the total amount here, then our potential profit would be based on if we invoiced for everything. So a good way to look at that, especially for a lot of agencies that are billing fixed price, is like, okay, so we might estimate that we're going to be putting in, we're going to charge our client for, $10,000, and even if we spend $1,150 worth of time and expenses, we're still going to bill them $10,000. So the potential profit would be showing you how much your profit would be if you billed for the $1,150 instead of the $10,000 that you originally agreed upon. That's why it's a very, very important value for agencies that are billing based on a fixed price. And then, of course, the actual, profit loss is just comparing your invoice total to your cost total and telling you what did you actually make. So do you think that cleared it up? Any follow-up questions to that at all?
Hey, Mark. You know what? Aaron has gone quiet, but Aaron, if anything is missing that you want clarification on, please feel free to reach out to us on the success team. It's just success@functionpoint.com, and I'd be happy to have a one-on-one with you to go deeper into that. But Mark, before we go any further, I did have one other question from Jen, just on how to see total dollars invoiced by service. I know you kind of touched on this earlier with one of your homemade reports, but maybe if you don't mind just quickly repeating that in like Cole's Notes version.
Yeah, for sure. So there's a little bit of a kind of a caveat to this item. So if I do a timesheet find and I pull up a list of all my timesheets, the timesheets has the service data. So it's telling me what my service data is. I also have invoice values for this time. Now the invoice value may not match the billable value of the timesheet. I could have here's a perfect example. I invoiced this $200 timesheet for $1,530. Maybe for whatever reason, who knows why. But, it's the invoice value then, of course, is tied to the service. So if I'm running a report that is showing that I'm then exporting and then running a formula based on, the service, I can then see my invoice total based on the service. But this doesn't really help you with the question that you're asking, to be perfectly honest. And the reason is because you don't always invoice when timesheets exist, and that makes it a little bit difficult. So, for example, if you're not managing an accrual accounting process, so you're not managing a deposit invoice process where you're then reconciling later on, and you also bill for work up front, what that means is that you're plugging in invoice values that is by service for which there are no timesheets that exist at that time. Now, if you manage an accrual accounting process, this isn't really it's a moot point. It doesn't matter. If you don't, which most of our clients don't, I think most of our clients are cash-based, because most agencies I speak with don't bill tremendous amounts in advance. You might bill in advance, but not really enough to really require an accrual process. It just means that you're going to be missing some of the values there. Now, this is actually a really common request, and one that we're looking at some better solutions to in the future. But there's actually one of the reasons why I did want to show one of the reports that I had on my list today. I'm going to skip over the billable hours recovered, which we'll come back to, and we're going to take a look at a different report, and it's called Revenue by Revenue Account Report. So what I'm going to do is I'm going to pull up a list of jobs. I'm just going to select Find Active. from the jobs list, up at the top right, there's a little report icon. And there's a report here called revenue by revenue account. Now, this isn't 100% ideal, but it can help out. So I'm going to select revenue by revenue account report. Now, what this is showing me is a summary of all of the jobs by my revenue accounts. So the revenue account is your, the income item that is tied to the service. If you have a one-to-one match of your services to your QuickBooks structure, then you immediately have your report. I have design, production, copywriting, coordination, so on and so forth, and I can see invoice totals that is accumulative across all of those different jobs. So, these would be then my services if it's a one-to-one match. If I look at, maybe I should zoom this in. It's probably really difficult for people to see on the other side. Let me increase the size here. So again, design, production, copy, coordination, web design, so on and so forth. And then I have my invoice totals for these items. Down at the bottom, we have different tabs. And these different tabs are then showing me a more detailed overview of each job and each of the different services for those jobs. Now, what I could then do if I wanted to get really clever is I could actually create a report that's querying the different jobs in the different tabs and accumulating invoice values that are based on the service name. So you have access to the data on a job by job level. You also have a summary. So it's getting a little bit more complex with this example. I'd recommend maybe we follow up with this for any specific questions on this topic. But I would recommend checking this out. If you're wanting to see the result of total invoice by service level, I'd recommend running this report and seeing what you find, and then you can kind of take it from there as to whether or not it's meeting your needs. But again, you're going to find this in the job list under the little report icon called revenue by revenue account. So I'd recommend running that. Take a look at it. It gives you, a very, very detailed breakdown across everything that's in the list. So there's a lot of possibilities there around what you could do. There's also, again, a good summary right at the start there. So I'd recommend checking that out. The next report that I want to touch on is one that I recommend a lot as well. It's called Billable Hours Recovered. And this is a really, really good financial report to look at and understand how specific staff or specific clients are performing. I'm going to look at it by client today, I think. But if we look at reports, if we look at Analyze, there's two reports here called Billable Hours Recovered. It's by staff and by client. I'm going to look at it by client. And I'm going to say, show me everything from Jan 1 until today. I can narrow this down by specific client or specific staff. I'm just going to run it for everything. I find this to be a very useful report. What this is showing us here is an overview by client with each of the jobs for that client and each of the staff that worked on jobs for that client. What are the total hours that we've put in? What was the value of that time, billable and cost? How much have we invoiced for that work? And what's the profitability for that as well? Variance is comparing our invoice versus our billable. So we put in $9,800 worth of work for this client in that time period. We invoiced for $9,100. So we're $700 out of pocket when it comes to the billable value. But the cost value of our work was $2,375, and we invoiced $9,100, so our profitability is $67.25. So we can see these comparisons really, really easily. If you're ever confused about, hey, what is this comparing? Just click on the column, and it'll show you exactly what it's comparing. H19, negative F19 equals this column. Really easy to understand what it is you're looking at. Notice how we have a value here called unspecified internal service amount. Very, very common thing when people start to look at this report. They're like, what is this? Where is this coming from? What does it mean? What this is referring to is an invoice value where there is no work specifically related to that invoice value. So earlier when I was talking about the concept of timesheets being tied to invoice amounts, whether or not you're billing based on time at all, you could be billing based on fixed price, the timesheets are still getting a value as long as they exist in the system. But if you bill for something up front and no timesheets existed, like in this case, this $6,000, then it's not being accounted for in these amounts, but it's still right here. So I could easily, drop it into my calculation and use it. But again, it's just representing what have we invoiced where no timesheet value was present at that time. There were no timesheets to relate that invoice value to. The revenue did not get tied to timesheets at all. But then this allows us to see, and it's usually good to run this for historical time periods where billing cycles have been done. So you don't want to run it for a current month where a billing cycle hasn't been done, which I actually kind of just did. But when you run it for information where run it up to the previous month, then what you can do is you could go down this list and see, okay, well, my client, American Express, this is our profitability for our time, and kind of go down and see totals. Here is the Blue Line Digital total, so I can see how we did for that specific client. Here's my client Branson Incorporated. Here are all their jobs. So we've done a bunch, and then here's my total for Branson Incorporated. So it's a pretty profitable client. And I can go down and see job by job breakdown, staff person by staff person breakdown, and really get a very, very detailed understanding of what is the profitability, what is my billable value recovered on these jobs by client, by job, by staff person. It's a very, very useful report. I recommend it a lot. It does take a little bit of time to kind of get used to, scrolling your eyes along it to really understand, some of this can take a little bit of time to get, as far as the fact that it's giving you totals by so many different values. But once you get a good understanding of what it's trying to accomplish for you, it's a very, very useful report. Even when if you're using some sort of retainer structure where you have jobs that are completely separated out from other things, you can still look at totals by the client and know that those totals will be accurate. So really, really good report. I do recommend. And again, that was under reports, analyze, and billable hours recovered. I was looking at it by client, but you could look at it by staff as well if you prefer. So we're running out of time close. We're close to running out of time. I thought we were gonna have a little bit extra time, but it looks like we're getting right down to it. That hour kind of flew by. Were there any other questions that you think we should address on screen?
I swear, it's like as the questions start coming in, you ask me. It's like perfect timing. So there actually is one question from Brandy, and it is a good one that would probably be good just to touch on. Just in the concerns of like the fact that a lot of these reports do have cost columns and making sure that individuals that maybe are able to pull the reports don't see the cost. There are permissions in the back end, so we can make sure that individuals don't see like salary or any wage information. But Mark, you might need to just confirm for me, there are some reports that because of the amount of cost information in it, it will remove that report. They won't be able to view it. And then there are some reports that it would just blank out the cost column. I don't know if you can elaborate on that or not though, Mark.
Yeah, for sure. I can definitely touch on that. I mean, you were exactly correct in what you just said. So first of all, let me show you where to find the permission. When you look at the permission sets, down at the very bottom, there's salary wage info. And this is just basically just referring to, I mean, it says show hourly wage. I think it says that just to make it really simple, but it's just referring to cost information. So if I don't have this selected, then nowhere in the system will you see cost. So, trust me, we've gone through it with a fine-tooth comb. There's definitely no area where it's going to show costs as long as you have that deselected. And what Sophie was saying is correct. So there are some cases where some reports will not be available. So the report itself would make no sense. So it just isn't there. And then there's other reports where the report is still there, but if you don't have the permission, the cost column comes in as blank. So there's some reports where the whole thing isn't driving by that cost value, but the cost value is included on the report for whatever reason. So it'll just blank out the column. So as long as you have this information deselected, then you can sleep soundly at night knowing that staff people aren't going to gain access to that data. Okay. Well, I think that those are all the questions that we have for now. So, Sophie, thank you very much for handling all these questions that have been coming in, and thank you everyone for the questions that you've asked. Appreciate your feedback and things like that. And then, to everyone that's joined the webinar, I really appreciate your time and checking this out. Next week is going to be an open Q&A webinar, and then the following week we have the start of a two-parter all around task management, project management, assigning work, scheduling, managing your task lists, so all that good stuff. So it's going to be 2 weeks from now. They're going to be the first one, and then 2 weeks after that will be the second. So please do register for those, and I promise it'll be interesting. There's going to be some cool stuff around project management to show off. Sophie, anything that we should touch on before we take off here?
No, I think that was really great, actually. I learned lots during this webinar, so thanks, Mark. Probably the only last two items is something I kind of always like to say to some of our customers is that the reports are only going to be as good as the data that you put into it. So just making sure that you're staying on top of entering all those timesheets, expenses, so that you can get all that financial data for yourself. As well as if you have any follow-up questions, again, feel free to reach out to success@functionpoint.com. We're happy to help.
Of course, and thanks, Sophie. Thanks, everyone, again. Have yourself a great rest of your Wednesday, great rest of your week. I guess we're almost done. We got two more days after this one, and then it's the glorious weekend. So thanks, everyone, again, and we will talk to you all soon. Cheers. Bye.